Mortgages 101 and what you should know as a consumer who's looking to purchase a home and finance it in 2024. We're going to dive in a little bit, guys, and talk about everything that you should know when considering purchasing a home this year. One of the things that I want to mention to you is that homeownership is super important. It is a surefire way to build wealth. And if you're on my page and kind of gone through my videos, you'll know that I say that a lot. Understanding mortgages and grasping the concept that they are probably the longest loan product or loan that you'll ever have, right? Mortgages have a 30-year term, which is standard for most individuals to take when purchasing a home. Now, there are shorter terms like 7, 10, 15, 20-year terms, but most individuals who are purchasing a home, especially as a first-time home buyer, take a 30-year mortgage. Now, we're not saying you can't pay it off ahead of time, which is super important that you put extra money towards your principal every single month if you are able to. But we are saying that it's a commitment, right? When you purchase a home, it's a commitment. You purchased a home and you told the lender that you're going to live in this home for however many years, and you plan on paying off this loan over the course of 30 years. When you purchase a home and you take a mortgage for 30 years, it's the largest transaction normally that an individual will make in their lifetime. And it's super important that you understand the importance of knowing what it is that you've gotten yourself into and how it'll benefit you and your generations to come in the long run. Your credit score is super important when it comes to mortgages. It is the key factor that we use as mortgage professionals to determine your interest rate, whether or not you qualify, how much you qualify, as well as the rate and term that we're going to give you when qualifying. Choosing the right mortgage term, right? Your mortgage term will depend on what you can afford. I often tell people it's easier to get into a 30-year mortgage and pay it off faster than it is to get into a 15-year mortgage and no longer be able to qualify for that mortgage. What do I mean by that? No, I'm still not saying it right. Here's an amortization. Here's, that word to cut the payment down. How you can pay it on a 15-year schedule, but even though you have a 30-year mortgage, if anything happens, let's say something happens in 15 years and you can no longer make your mortgage payment, at least you know that you're not obligated to pay on a 15-year term because, you just never know. Now, when you're talking about terms, you're also looking at loan types, FHA, conventional, VA, USDA. VA loans are a great loan product for our veterans. Thank you for your service. It allows for no money down loans, okay? You also have USDA loans, which are available in rural areas, and they don't require a down payment as well. Now, USDA loans do have a little bit stricter guidelines on their product. VA loans are a lot more looser, and then you have FHA mortgage, where you can put as little as 3.5% down. And you also have conventional products that allow you to do as little as 3 to 5% as well. So understanding your situation will let you know which loan product you may want to fall within when purchasing this home. And you want to do some research on that. You want to talk to a mortgage professional. You want to understand whether or not you can even qualify for some of these different loan products. I think it's super important to use financial tools when you think about purchasing a home. You don't want to kind of wake up one day and say, oh, I want to buy a house, right? You want to know that when you purchase a home, that you're going to be responsible for the things that your landlord is responsible for now, right? If the refrigerator breaks down, you got to fix it. If, there's something that needs to be replaced in the home, it's your responsibility to do it. You can't call a mortgage company and do it. Now, you do have homeowners insurance, but those things don't cover some of the things like a normal landlord will cover. Homeowners insurance, is typically for things like plumbing, foundation issues. You may get some electrical things covered in your insurance policy, things of that nature, which we kind of call more major. But little things that you may need to do around your home, like hiring a lawn care person to take care of your yard, right? Things like that you're responsible for. So it's super important to invest in financial tools apps on your phone that can track your spending, help you create a budget so that you can have a cushion when you do buy, just in case something happens. Now, I've had clients who purchased a home where they had absolutely no money left after they bought, right? They wanted to be a homeowner. I'm not saying that that's the wise thing to do in every single case, but they had a game plan, right? They knew that they were going to be able to save so much more money moving forward, and they kind of they knew, but they had a game plan. Now, a lot of times we hear people say, so often we hear people say, put more money down, put more money down. Well, I don't know if I agree with that 100% unless you're able to do that, right? If you're someone who says, I want to buy a home because I want to build wealth, I want to get into home ownership, I want to start living where I can get paid to live, meaning I go to work, I come home every day, and every day that I do that, my home is appreciating in value and it's getting equity because I'm paying down on my mortgage. If that's you and you're saying, I don't have a lot of money saved, Arlicia, but I want to own real estate, well, don't get trapped in the rat race of you need 20% down, because you do not need that. There are people who purchase homes all day long with no money down. If you're following me, and when I post this video just about a week or so ago, I had a client close and she put absolutely no money down on an FHA mortgage. You may not qualify for that product. Okay. That may not be the product that you're able to get. But what I am saying is understand where you are financially so we can determine, or at least whoever you're using as a mortgage professional can determine what box you fit in, which way to navigate the mortgage process for you so that homeownership is successful for you. With all of that being said, it's a lot of research that you want to do. There's a lot of questions that you want to ask. Right now, you are living somewhere. You purchased a home. Now you own the roof over your head, right? And so with owning that roof over your head, you are building equity. When I purchased my first home, my husband and we purchased our first home. I think we paid $275, $280, something like that. When we sold our home a little bit over 2 years after living there, we sold it for $360,000, $375,000. Well, if you rent right now and you decide that your lease is up and you want to move, there's nothing you can get out of that lease. People often say, don't buy, or the prices of houses are up. When we purchased our first home, we were told the same thing. Oh my God, the prices of houses are too expensive. Don't purchase, don't purchase. We bought 3 homes since then, since that house. So I say all of that to say, homeownership is always important. Homeownership will always build wealth. You know why? If you purchase within your means, you set yourself up with a budget. You have the financial tools in advance before you take that step and leap to say, I want to buy. If you do all those things up front and have a solid game plan, I assure you at some point in time, that property will have appreciated in value and you will be able to build wealth. Even the people who purchased a home before the crash of the market, if they bought and still had their home, that home has appreciated in value. There is no instance where properties, even if they come down, they always go back up. It's just like rates. Even if rates go up, they always come back down. It is the ecosystem cycle of mortgages and real estate. I hope you enjoyed our talk.